One of the things I want to highlight is the long-term and short-term perspective in algorithmic trading. This is Adaptive Moving Average, one of our top trading systems in our portfolios. And you can see some of the trades it has taken recently. I also want to show you the performance summary, hypothetical back-tested performance summary, going back 7 years with $25 round turn slippage and commission. And this, for one, is one of the best ways to short the market. If you take a look at here, the total net profit 202,650. This is one of the strategies in the portfolios, specifically the stock index portfolio 34. Really nice statistics for a day trade strategy on the S&P. And we can scroll down and you can see the long trades are 108, 825. And while some of these strategies are highly biased towards the long side, this is also doing well on the short side. Slightly better on the long side, but really good results on the short side, is on the long and the short side. Pretty balanced for this type of market environment. But here is what I want to point out in this video is the long-term and short-term perspective in algorithmic trading system performance summaries. You're going back 7 years looking at this, and when you look at this equity curve, it says, wow, this looks great. I like this equity curve. Has some really good straight line periods, some sideways periods, some manageable drawdowns. And so why are the portfolios kind of going sideways right now lately? Well, if you look at this, the time period in these performance summaries are, when you're trading them, longer term, the idea that what you can do in 1 year is more significant than what you can do 1 to 3 months. And most traders, especially new traders or retail traders, get discouraged over a very short period of time, 1 to 3 months. And you take a look at this last equity peak. It made an equity peak here in August, but it hasn't really gone anywhere since July in this trading system. And so while it has really good performance results, there are periods of time where any individual trading system can go through a sideways trading period. And this is a 7-year back test. I want to show you the last 7 months. Now, the reason I want to do this is to show you why we use multiple strategies in our portfolios, because most of the time this would be a good setup overall. Had you traded this on an account for the last 7 years, these would be great results. But most short-term traders are more active, and you get your dedicated server, you get your live quotes, you set up your trading platform, and you sit here and you go from June of 2020 to September of 2021. That's 15 months. And this one strategy hasn't gone anywhere. It's a great strategy. But this is what happens in most strategies that I've dealt with over the years that aren't optimized, that aren't curve fitted. They go through sideways periods. Here's another one from May of 2019, and it starts to break out here in March of 2020. So about 8 months. It's easy to get discouraged over a several month period when the strategies don't perform well. And so you have to have a long-term and short-term perspective. This is the long-term perspective. Really good results. Imagine you could trade this easily with a $20,000 account, and for these results to have happened over the last 7 years would have been a great setup. These are hypotheticals once again. We trade this in the portfolio, and we're just isolating this separately. So let's look at this over the last 7 months. So here are the results over the last 7 months. You can see, you would not think, if you looked at the first chart, you would think, great, it's a great strategy, you want to trade that. If you look at it over the last 7 months, you think, next, I want to check out another strategy. I want to see what has a straight line equity curve now. And so my experience with trading is there's no way to fix this unless you're chasing holy grails or optimizing, is that strategies, they perform and oftentimes they stop performing, and oftentimes really good strategies that have traded well over the years have sideways periods or down periods or periods that do this. And so those can take time. And so it's hard to time a strategy. So while one strategy is doing this, another strategy might be doing this. And so if you say, okay, I'm looking at 2 strategies now. I'm looking at strategy 1 and strategy 2. I'm picking strategy 2. It's got an equity curve that's moving higher. So as soon as you pick strategy 2, it starts to do this, while strategy 1 might start to do this. And so you're thinking, I should have picked strategy 1. So now I'm going to pick strategy 1, and then as soon as you pick strategy 1, it does this, and then strategy 2, you switched away from strategy 2 to strategy 1, and strategy 1 is going sideways, and now strategy 2 is going higher. This is the concept behind diverse trading systems, trading groups of trading systems, because not all strategies go up all the time, and we're active traders, and we try to seek profits every month. We have losing months, and but this is the reality of trading. And so I wanted to share with you this perspective of long-term and short-term perspective on algorithmic trading systems, automated trading systems, and how to think about this and how to set it up so you can set a trade a group of strategies, a set of strategies, instead of trying to pick or jump around from one strategy to the next. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.